Hey everybody, Martin here, your favorite Regina Realtor, and I quickly wanted to talk to you about interest rates and inflation, how they pertain to real estate. Now, I know you're probably thinking, geez, thanks Marty, really want to hear more about inflation and interest rates. That's great, don't hear enough about it, but just hear me out, okay? There's three things I want to talk about, and they're kind of important. So here we go. So number one, when interest rates are high, as an investor in real estate, you can get some better deals, and that's because with high interest rates, there's less buyers, right? So simple laws of supply and demand mean that if there's fewer buyers, prices tend to go down a little bit. Now, I know things are different in different parts of the country, but in Regina in particular, we have seen some price adjustment in certain types of properties because people aren't buying them as much. So there is some opportunity there if you're an investor to get a little bit of a better price, okay? Number two, during high interest rates and high inflation, typically rents tend to go up. And again, for the same reason, fewer people can buy because of higher interest rates, so they tend to rent longer. And as new renters enter the system, of course, there's more demand, so there tends to be upward push on rental prices. Even with our properties that we own, I have found that we've been able to generate higher rents because of the demand that we've had. So when we've had a vacancy, we were able to fill it with a new tenant for more money, which is good from a landlord standpoint, not so great from a renter standpoint. But if the demand is there, there's an opportunity for you as an investor, right? Okay, and number three, real estate is a really good tool to guard you against inflation because real estate tends to sort of insulate you from that a little bit, right? I mean, not always, but generally speaking, right, rather than parking your money in a bank account and watching it sort of deteriorate, like when you think about $1 is worth $5 from 30 years ago, right? I mean, like, things have changed. I think, does that make sense? So what $1 bought you 30 years ago, now $5 buy you. Do you get it? I think that, okay, sorry about that. I don't know what's going on up there. But anyway, okay, so inflation. So real estate tends to sort of guard you against that inflation, right? So you've got a little bit more of it's a more secure vehicle for your money as opposed to just leaving it in a bank, right? So it shouldn't deteriorate as much as your dollar would if it's just sitting in the bank. So there you go. That's the three things. So your money is guarded better in real estate against inflation because real estate tends to go up alongside. Rents tend to be higher and demand tends to be lower because prices are down. So look, it's not a bad time to invest in some property. I've seen a lot of it happening in Regina. We've had some demand from other cities, lots of investors coming in from Vancouver, Toronto, Calgary, looking at our market because there's some opportunities here. Our vacancy rate is super low right now and rents are quite good. We can cash flow, which is something that obviously is not possible in downtown Toronto, right? So anyway, I hope this video was useful and helpful. So if you need anything, give me a call, 306-527-0500, or email me, martin@reginaexperts.ca, and hope you have a good day. Cheers.